This is Brian still for Time and Strategies, Monday, December the 10th. And today we went short 40% in the indice basket using the Dow, the S&P, the Russell, and the Nasdaq 100. So again, we are short here. Let's get this price magnet off here. We are short here today at the close using our RIDEX end of day strategies, 40%. We are willing to take a little heat. Obviously, we're going against the trend, against momentum. We could see a move against the position. Obviously, as high as it wants to go. But from here, being short, I anticipate that we shouldn't see much more than an intraday drawdown or a closing drawdown, much more than 1%, which takes us right up to about that level on the S&P, on the spiders, right about, the 1530 level or the 153 half, 154 level. That'd be a 1% drawdown at 40%. That'd be 0.4% to the account value. What we're looking for, if that happens, based on price action, we may add to that position and scale in another 40%. Doesn't mean we're gonna, but as of today, things are starting to get a little bit overstretched, and we want to take advantage of the hype going into the Fed meeting. Obviously, the Fed's in there trying to manipulate things to engineer confidence into Christmas and the holidays, and everybody take their minds off really what's going on with the banking sector. And let's take a look at the XLF for the financials. Again, we are currently short the financials as of Friday's open, so we're taking a little heat right there. We're willing to. I know I may have said that we were looking to close that position if it closed above yesterday's high, Friday's high, which was right at about 31.75. We got a 31.86, so we got a 10 cent adverse move against our stop. We're still long that SKF, which is a 2 beta fund, and again, but we are long with this fund a limited position. So again, if the worst case scenario, if this market just keeps moving against us, well, then risk management may come into play much quicker than we anticipated. But going into the Fed meeting is really going to tell the tale, so I don't expect much until after that tomorrow. And we'll keep you updated on Tuesday. Next position that we have currently is the short U.S. government bond fund. Again, just chugging along. It's just 1, 2, 3, 4 days higher. We should maybe possibly see a another day higher tomorrow. What we're looking for, just for a quick snapshot here, is a move into this regression channel right up about there. We busted that 4.5 level on the 30-year. That could take us up to, like I said, about 4 3/4 from the low. That would give us about a 10% move in rates, and right about at that 465 level, 475 level, we may just take that position off, but we'll see again based on what happens in the market. For all those that are considering the XLE position that we put up on the commentary as far as a short, we did not short that position yet. We did not enter a short in the XLE. Just because, again, it's the strongest sector by demand as far as oil and so forth, but it's starting to break down, because if you look at some of the other individual stocks that make up that component, they're not showing the kind of strength that I'd want to see. And again, we've had 1, 2, 3, 4, 5, 6, 7, 8, 9 days of higher highs without an interruption or violation. So that's stretched as far as I need to see just to start looking at the short side. And let's take a quick look at the SMH. For those of you that are along with us on the long position with the SMH, I really don't have a whole lot of hope for this position, just because it's not moving as fast as it should be, based on the kind of balance we've got with the overall market. So this is just, by all definitions, looking like a real dead cat, not even bounce, but dead drunk cat crawl of some sort. So I don't have a lot of hope for the SMH position at this time due to just its lack of momentum and participation. But it still is a long position. And we'll hold on to it just to see what happens. Last position that we might take a look at here, and again, we're speaking about this in our commentary, is the IYR. If we wanted to get short something like that, we would use the SRS. We did not put the short position on today, but we are looking to buy this stock or this ETF, which is a -2 beta real estate or REIT fund, which correlates inversely to, you know, our basis proxy ETF, which is the IYR. We'll see what happens. Again, for the most part, to me, this feels like and looks like and indicates everything as just, you know, a bear market rally. Where we get short this position or when or what, you know, we'll keep you posted. But other than that, everything is, on hold till tomorrow, and we'll keep you updated then. So, other than that, this is Brian Stoll for Timing Strategies for Monday the 10th. And feel free to give us a call or send us an email. We'll see what happens tomorrow. And have a good night. Happy Hanukkah. Merry Christmas.